Hey, good morning. Let's go over today's trade plan. So in the overnight session, we got a pullback to that 44 to 46 support, where responsive buyers were active on first test and pushed ES back into the prior day's range. At this point, we've seen some pretty decent weakness in TF. NQ has also shown some more weakness. ES has been the strongest market on this pullback, and today is a important inflection point, which is going to give us some guidance on where this market could be headed, even on the larger time frames. So, this test that happened in the overnight session is pretty important. It was basically the test of the breakout that happened a few days ago. And at this point, we're going to be keeping an eye on the other markets to see and make sure that they're holding up okay, because continued weakness in NQ and TF could drag ES lower as well. So off the open, we're going to watch 50 half, which is the previous day's low, and the initial support zone, 47 quarter to 49.75. If this market is actually going to reverse and start heading back up, then we should hold the initial support zone, 47 quarter to 49.75. We're using 44.75 as the bull bear line in sand, so a break below that would essentially invalidate this whole upside movement that we've seen over the last couple of days. And at that point, we could get a push lower into 38 quarter to 40 quarter and 33.75 to 35.75. And this entire upside move we've seen would essentially be invalidated. And that's why today is a important inflection point in the market, because today we get that decision of whether we get a continuation to higher prices or a failure, and some more selling to come over the next few days. So off the open, initial support, prior day's low are going to be in focus. On the upside, we have the gap at 56, previous VPOC 58, and then the important inflection point on the upside is 59 to 61. And if we can take this 59 to 61 area out, that would essentially confirm that we have some pretty aggressive buyers active in the market, and at that point we could actually see a move back up towards yesterday's high to 69 quarter, 71 quarter. There's some minor resistance at 66 to 67 along the way, but really, the next main inflection point would be back up near the 69 quarter, 71 quarter area, and first test of that zone can still attract sellers and some profit taking, because you would essentially be going from a pretty decent swing low all the way back up to the prior session high. So first test, of course, can still get some selling, if not just for profit taking. And bigger picture, then we could actually even break this and start heading back up to 76.75 to 78.75. That could be a bit out of range on the day time frame today, but a break above 59 to 61, and especially a break that happens with some conviction and some momentum and volume behind it, would eventually be setting up the market for a move back up towards 76.75 to 78.75. Of course, we're going to take it as it goes and update our views along the way. But right now, the way the market is set up, if we get continued weakness on NQ and TF, then we could see some selling come into ES and get a push down into 38 quarter, 40 quarter, potentially 33.75, 35.75. But if the buyers actually hold ES above initial support, above the prior day's low, then the upside target is going to be 59.61, and this is going to be the primary inflection point on the upside. If this gets taken out, if the larger time frames really step in and this gets taken out, then you really want to be very careful on shorting this market, because we could have some decent momentum back up towards the 69 quarter, 71 quarter area. So right now the market's at an inflection point. I think we are going to see some directional movement today, despite the fact that we don't really have any major economic catalyst on the day time frame. But I think we can still get some directional movement because of where the market's at. But because the market is at an important inflection point, and basically one side I think is going to step in and be more dominant above initial support, above the bull bear line in sand. The buy side still has chance of holding up, But if the other markets sell off, then we'll focus more on the short side. Looking at NQ, keep an eye on the 88 to 91 area. If NQ starts breaking below 88 to 91, that would be a red flag for buyers in the S&P. Looking over at TF, at this point the 81 to 83 area is support in TF, and if that area starts breaking, then again, we need to be careful looking for any long setups in the S&P and actually probably start shorting the market a bit more aggressively. So those are the main ideas heading into the open. Let's see whether the buyers can hold it up at initial support and prior day's low, and we'll take it from there.